Hello viewers, welcome to my channel. I'm Hasham. Already I have completed 16 problems on Consolidated Balance Sheet. This is the last and final video on the problems of holding companies. So after watching all the earlier videos, hope my regular viewers who are already continuously watching the other earlier videos definitely got a good command on the subject of holding companies. So it will be difficult for you if you join in between. So first of all, I suggest you, if you want the complete grasp on the subject, first watch the introduction part of the topic. You can be able to know what is there, what we have to prepare, how to prepare. All these things you can get only in the introduction video. So if you have not watched the earlier video, I suggest you to go to the playlist of my channel. Select the subject Advanced Corporate Accounting. Select the topic Holding Companies. Watch the first introduction part. I have explained the complete detail regarding what is holding company, what is subsidiary company, what is consolidated balance sheet, what are the issues in making consolidated balance sheet, what are the provisions of AS 21 on consolidated balance sheet. All these things I have explained in detail in the first part. Then 10 short problems I have solved starting first, second, third videos. So starting videos are very important. So this is the last and final video. The two more problems I am going to solve in this video, 17th and 18th. So before starting the problems, I expect my viewers to have a printout of the problems which I have given in the link under my description. So before watching the video, always keep on hand the problems. The 17th problem I am reading out. The following is the summarized balance sheet of H Limited and S Limited as of 31st December 1991. Liability side, share capital H Limited 2 lakh, S Limited 50,000. Then reserves 30,000, 10,000. Balance in profit and loss account as on 1st January 1991, beginning of the year. 60,000 H Limited, 30,000 S Limited. Profit for the year, current year's profit 40,000, 10,000. Remember one point. The share capital of H Limited, the reserves of H Limited, the P&L account balance of H Limited and profit for the year of H Limited will come in the consolidated balance sheet as it is. No adjustment, no change. The holding company's share capital and the holding company's reserves and P&L account will come as it is in the consolidated balance sheet. Now creditors, simply we have to add up both the creditors. Sundry assets, add up both the companies. Shares in S Limited 2,30,000. That means investment made by H Limited in S Limited. The value of that investment is 2,30,000. This we will make use to calculate the goodwill or capital reserve in the working note. Then bank balance is given, cash and cash equivalent, we add up both. These are the two balance sheets given for H Limited, S Limited. Now, H Limited acquired 80% of shares of S Limited on 1st July 1991. First point. The holding company holds 80% of shares in the subsidiary company. Remaining 20% shares of subsidiary company are held by outsiders, minority interest. And the shares are purchased on 1st July 1991. When we are closing the accounts, 31st December 1999. So how many months pre-acquisition and post-acquisition? 1st July means July, August, September, October, November, December. 6 months are post. The first 6 months are pre-acquisition. So whatever current year's profit of S Limited, we divide it into two parts. Half profit is pre-acquisition profit, half profit is post-acquisition. The profit is given 10,000. For S Limited, profit for the current year is 10,000. So half of 10,000, 5,000. 5,000 rupees profit pre-acquisition. That's a capital profit. And 5,000 rupees profit is post-acquisition. That's a revenue profit. Then included in the assets of H Limited, there is 30,000 loan to S Limited. Intercompany transaction. The holding company assets, sundry assets of holding company are given 1,80,000. In that 1,80,000, 30,000 rupees is the loan which is given by H Limited to S Limited. And included in the sundry assets, there are 30,000 loan to S Limited shown as creditors in S Limited. That 30,000 rupees is the loan given by H Limited to S Limited. So that 30,000 rupees is included in sundry assets. So we deduct 30,000 from sundry assets. Secondly, this 30,000 rupees is included in creditors of S Limited. Creditors of S Limited. It is an intercompany transaction. So 30,000 will be deducted from sundry assets and 30,000 will be deducted from creditors. Right? Then sundry assets of S Limited include furniture and fitting of 40,000 to be revalued at rupees 50,000, being over depreciated as at 1st July 1991. So at the time of purchasing the shares, it was observed that in the books of S Limited, furniture was valued as 40,000 instead of 50,000. The actual value of furniture was 50,000, but by mistake it is taken 40,000 undervalued. Now we have to increase the value of furniture and fixture, sundry assets of S Limited by rupees 10,000. So any revaluation, any increase in the value of the assets due to revaluation of S Limited will be a capital profit. Will be a capital profit. Now this 10,000 rupees is a capital profit. So it will be added to capital profit, and again that 10,000 rupees will be added to sundry assets. Prepare consolidated balance sheet of H Limited and S Limited. That's all. So only one or two new points are there. Remaining all the points are same. See, consolidated balance sheet of H Limited and subsidiary S Limited as on 31st December 91. First of all, draw the complete format of the balance sheet. Equity and liability, shareholders fund, share capital number 1, reserves and surplus number 2, minority interest number 3. We should not take the amounts. We will take the amounts only after making all the working notes. You must remember the format of balance sheet given by the Companies Act 2013. Now, non-current liabilities, debentures are not there. Then current liability, trade payable, fourth note, and other current liability we don't have. For the sake of formality, we are writing down the format. Then assets, non-current assets, fixed assets, tangible 5, intangible 6. Non-current investments are not there. Then current assets, inventories, trade receivable, cash and cash equivalent, other current assets. In this problem, we are not given any inventories. We are not given any trade receivable. We are given cash and cash equivalent. And other current asset we don't have. So we have drawn the complete format of balance sheet. Now working notes. Now concentrate here. The main part on which you should give full concentration is working note. This is the heart of the problem, heart of the calculations. First of all, share of H Limited in S Limited is 80% given in the problem. When 80% shares are held by H Limited, 20% shares will be held by the outsiders, minority interest. The shares date of acquisition. The date of acquisition of shares is 1st July 1991 and the date of the balance sheet is 31st December 1991. So pre-acquisition period 6 months, post-acquisition period 6 months. First working note we are clear about. Next, current year's profit. Current year's profit of S Limited, subsidiary company, is 10,000. Out of 10,000, 6-month profit pre and 6-month post. So 5,000 rupees is the profit of pre-acquisition period. The pre-acquisition profit 5,000, post-acquisition profit 5,000. Now we'll calculate capital profit. The reserves of S Limited. Reserves of S Limited 10,000. The profit and loss account balance of S Limited on 1st January 1991, beginning of the year, 30,000. The current year's pre-acquisition profit. The current year profit 10,000, out of which pre-acquisition profit is 5,000. And this 5,000 is also a capital profit. Now appreciation on assets of S Limited. Just now I told you on 1st July 1991, the assets, the furniture and fixtures of S Limited has been wrongly valued as 40,000 instead of 50,000. So actual value 50,000. So 10,000 rupees we have to increase. That is a capital profit. Now total capital profit 55,000. Out of 55,000, 80% of share goes to H Limited. 20% goes to minority interest. So 80% of 55,000, 44,000. And 20% of 55,000, 11,000 goes to minority interest. Now come to goodwill or capital reserve. First of all, investment of H Limited given in the balance sheet. In the balance sheet it is given 2,30,000. From this we deduct two items, paid up share capital and share of capital profit. The paid up share capital 80% of 50,000. you can see the balance sheet. The share capital of S Limited is 50,000. Of that 50,000, 80% is held by H Limited. So 80% of 50,000, 40,000. Sharing capital profit, just now we have calculated 44,000. Sharing capital profit of H Limited is 44,000. Total 84,000. Now 2,30,000 minus 84,000, 1,46,000 is the goodwill. That's it. Now minority interest. In minority interest, we'll take the paid up share capital, share in revenue profit, share in capital profit. First of all, paid up share capital, 20% of 50,000. 20% of 50,000, 10,000. Share in capital profit, 11,000. Here we have calculated capital profit. Share in revenue profit. Revenue profit means post-acquisition profit. The post-acquisition profit is revenue profit. Here we have calculated. Post-acquisition profit, 5,000. In that 5,000, 20% belongs to minority interest. So 20% of 5,000, 1,000. So total minority interest, 22,000. That's all. These are the only working notes. Now we'll come to the notes forming part of financial statements. First note, share capital. The details are not given. What is the face value of the share? What is the authorized capital, issued capital? Nothing. Only directly 2 lakh rupees share capital is given. So I'm taking 2 lakh. Share capital 2 lakh, take it in the balance sheet. Now second, reserves and surplus. In reserves and surplus, first of all, we'll take the reserves, P&L account, current year profit of H Limited as it is. So here, reserves of H Limited 30,000, P&L account of H Limited on 1st January 1991 60,000, current year's profit of H Limited 40,000. To this, we take a revenue profit, share of revenue profit of H Limited from S Limited. So how much is the revenue profit of S Limited? Here we have calculated post-acquisition profit. Post-acquisition profit is revenue profit, 5,000. Out of 5,000, 80% belongs to H Limited. So 80% of 5,000. 80% of 5,000, 4,000. Take the total, 1,34,000 is the reserves and surplus. Here you can see 1,34,000. Note number 3 is minority interest. Already we have calculated minority interest. Here we have calculated 22,000. So we have taken 22,000 minority interest. Now trade payable, creditors. Now creditors, trade payable. In creditors, we add up the creditors of H Limited and S Limited, 1,30,000. From this we deduct intercompany debt. Intercompany debt means holding company has given a loan to subsidiary company, and that loan is included in sundry assets of holding company, and that loan amount is included in creditors of subsidiary company. So we have to deduct 30,000 from sundry assets and from creditors. So creditors, I am deducting intercompany debt 30,000, 1 lakh. So here we have taken accounts payable, trade payable 1 lakh. No other current liabilities. Total 4,56,000 is the liabilities total. Now we'll come to the assets. Tangible fixed assets. H Limited, S Limited, add up both. Fixed sundry assets are given in the problem. We add up sundry assets. From this intercompany debt, loan is given by H Limited to S Limited. So we have already deducted from creditors 30,000. Now we deduct 30,000 from the sundry assets. So 30,000 intercompany debt, 2,70,000. To 2,70,000 we add appreciation in the value of assets of S Limited. S Limited के पास जो फर्नीचर फिक्सचर्स था उसका वैल्यू 10,000 बढ़ा दिए और वो 10,000 already we have taken in capital profit. Here appreciation in sundry assets 10,000. So one effect we have already taken in capital profit. The second effect is it will be taken under sundry assets. ये sundry assets में add कर देंगे 10,000. So 2,80,000 is the total tangible fixed assets. 2,80,000. Intangible asset is the goodwill. Already goodwill we have calculated 1,46,000. So intangible asset goodwill 1,46,000 I have taken. We don't have inventory, we don't have trade receivable, cash and cash equivalent. So here cash and cash equivalent, bank balance is there. H Limited, S Limited, take 30,000 total. 30,000 total. This is the end of problem number 17. Come on viewers, now I am going to start the last and final problem on holding companies. Problem number 18. So if you are perfect on these 18 problems, inshallah, you can be able to easily solve the problem on consolidated balance sheet. So I have applied my maximum in explaining you. So if you follow my instructions, if you regularly watch the video till the end, definitely you'll increase a lot of knowledge on your subject, confidence. Just don't keep the objective of simply passing the examination. Anybody can pass the examination, anybody can get the degree, but you will get the confidence only when you acquire the knowledge, when you gain the knowledge, when you try to understand the subject thoroughly. Then only there is a sense in getting the knowledge. Otherwise, if your objective is simply to pass the examination, you will not have any confidence to face the world. Nowadays, the market is very competitive. Stiff competition is there. So only the person, only the student who is fully capable, he only can find the place in the market. That's why you have to follow my instructions. So I'm very happy that within a short span, not even a year, I have started my channel and I got a very good response from the students. They are giving a lot of comments on my lectures. They are very much satisfied with my way of teaching. So I feel so happy. So my objective is to provide more and more topics on accountancy, finance, management. All these are the core areas of my field. Since last 30 years, I am in the teaching line, teaching the students for BCom, BBA, MCom, MBA, all this. So before starting this next last and final problem, I expect my viewers to have a printout of the copy and share my channel in your friends circle, in your group, so that more students can join, can take the advantage. And if you have any suggestions, please let me know. Please give the comments. I can be able to improve much more. My main objective is more and more students should get the benefit from my channel. Come on. Now I'll start the next problem, last and final 18th problem. From the balance sheets and information given below, prepare a consolidated balance sheet. So balance sheet as on 31st December 1989. So H Limited holding company, S Limited subsidiary company, two balance sheets are given. Share capital ₹1 fully paid shares, 10,000 H Limited, 2,000 S Limited. This is the share capital. The face value of each share is ₹1. So total share capital in S Limited is 2,000. That means S Limited is having 2,000 equity share of ₹1 each. Then profit and loss account balance is given for both the companies. Reserves are given for both the companies. Creditors and bills payable. Now come to asset side. Sundry assets are given. Stock, debtors are given. Bills receivable is given. Shares in S Limited 1,500 shares at the cost of ₹1,500. That means out of total 2,000 shares in S Limited, 1,500 shares are purchased by H Limited. That means 75% of share capital of subsidiary company is held by holding company. Remaining 25% is held by the outsiders, minority interest. All the profits of S Limited have been earned since the shares were acquired by H Limited. That means profit and loss account balance is showing 1,200. In subsidiary company, profit and loss account balance is 1,200, and it is saying that this profit is earned after acquisition of shares. That means post acquisition. The post acquisition profit is revenue profit. So completely 1,200 rupees is revenue profit. Now we have to divide this 1,200 profit between holding company share and minority interest. 75% will go to holding company, 25% will go to minority interest. But there has already the reserve of 600 on the date. The reserves are given 600 in the balance sheet. But this reserves, it is saying it is already there in the balance sheet at the time of acquisition. So before acquisition, reserves were there. So these reserves are capital profit. 600 reserves is capital profit. Second point, the bills accepted by S Limited. We can see here liability side, S Limited, we are having bills payable 300. Only S Limited, we have bills payable 300. And it is saying the bills accepted by S Limited are all in favor of H Limited. That means intercompany debt, whatever bills payable S Limited is having, those bills are drawn by H Limited. So we should deduct this internal debt, intercompany debt should be deducted. But it is saying which was discounted rupees 200 of them. So out of 300 bills payable, 200 rupees bill are discounted by H Limited. H Limited has drawn 300 rupees bill on S Limited. S Limited accepted 300 rupees worth of bills. Out of those 300 rupees worth of bills, 200 rupees bills are discounted by H Limited. By H Limited. Now presently how many bills H Limited is having? Only 100. So 100 rupees will be deducted. 100 rupees will be deducted from bills payable and also bills receivable. The bills which are already discounted, that is not intercompany debt. Suppose I have drawn on you 300 rupees worth of bills, and out of that 300 rupees worth of bills, 200 rupees worth of bills have discounted. That means gone with another party. Now I am having only 100 rupees bill. The 100 rupees will be deducted from bills payable and bills receivable. Sundry assets of H Limited are undervalued by rupees 200. Sundry assets of S Limited. There is a printing mistake there. Here it is given sundry assets of H Limited. Make it S Limited. There is a printing mistake. Sundry assets of S Limited are undervalued by rupees 200. So sundry assets are undervalued. Now we have to increase it. So this 200 rupees will be a capital profit. So any revaluation of assets done on the assets of subsidiary company, the profit will be called capital profit. So already reserves, it is given reserves of rupees 600 are pre-acquisition reserves. So that 600 is capital profit. Apart from that, this 200 rupees, the sundry assets are undervalued in the books of S Limited. This 200 is also capital profit. Now the stock of H Limited includes 500 rupees bought from S Limited, intercompany stock, at a profit at the latter of 25% on cost. The stock of H Limited is having 500 rupees worth of stock which is purchased from S Limited, and S Limited has earned a profit of 25% on cost. This point already we have discussed in the last 2-3 problems. So we have to find out unrealized profit in stock. Unrealized profit in stock we have to calculate in working notes. That's all. So this is the last problem, 18th one. Now see the solution carefully. Consolidated balance sheet of H Limited and its subsidiary S Limited as on 31st December 1989. So first of all, draw the complete balance sheet format according to Companies Act 2013. So equity and liability, shareholders fund, share capital number 1, reserves and surplus number 2, minority interest number 3. Non-current liabilities are not there. Current liability, trade payable 4th. Other liability is not there. Then total of the liability side, asset side, non-current assets, fixed assets, tangible fixed assets, intangible fixed assets, non-current investments. Then current assets, inventory, trade receivable, cash and cash equivalent, other current assets. Finished. So first blank balance sheet we'll make with note number, and these notes we will find out here. So first of all, working note. Concentrate on working note. What are the new points here? Capital profit. Capital profit means the profit of S Limited before acquisition. Before acquiring the shares by H Limited, what is the profit in the books of S Limited? That is capital profit. Now reserves at the time of acquisition 600. In the adjustment it is given the reserves are existing at the time when H Limited purchased the shares. So these reserves, capital profit. Then apart from that, revaluation of sundry assets. Sundry assets are 200 rupees undervalued in the books of S Limited. Now we have to increase it. 200 rupees we have to increase. So this 200 is also capital profit. So add up 800 rupees is total capital profit. Now out of 800, 75% of capital profit goes to H Limited. 25% goes to outside. How that 75%? Total number of shares in S Limited are 2000. Out of 2000, H Limited holds 1500 shares. Out of 2000 shares totally, 1500 shares are purchased by H Limited. So what is the percentage? 1500 divided by 2000 into 100. That will give you 75%. And outsiders 500. The 500 by 2000 into 100, 25%. So 75% of 800, 600, and 25% of 800, 200. So capital profit is divided between H Limited share and minority interest. Now revenue profit. Profit and loss account balance of S Limited. It is given in the problem in the last line that profit and loss account balance is the post acquisition profit, means revenue profit. The P&L account balance 1200, total revenue profit 1200, H Limited shares 75% of 1200, 900, and share of minority interest 25% of 1200, 300. The post acquisition profit, revenue profit is bifurcated between H Limited share and minority interest. Now goodwill or capital reserve. What is the investment value? Investment of H Limited 1500 given in the balance sheet asset side. So 1500 rupees are the investment. From this we deduct paid up share capital 75% of 2000. 75% of 2000, 1500. And share in capital profit. Share in capital profit we got 600. Take the total 2100. 1500 minus 2100, you are getting minus 600. Negative. Negative. 1500 minus 2100, you are getting negative minus 600. So it means capital reserve. If you get positive, it will be goodwill. Negative, capital reserve. That's all. Now come to minority interest. Next working note, minority interest. In minority interest, we'll take paid up share capital, share in capital profit, share in revenue profit. First of all, paid up 25% of capital. 2000 is the capital in S Limited. So 25% of 2500. Share in capital profit, just now you have calculated 200. So 200 is the share in capital. Share in revenue profit, you have calculated 300. So 300 is the share in revenue profit. Total 1000 rupees is the minority interest that will be taken in the consolidated balance sheet. Now unrealized profit in stock. H Limited is having a stock of 500 which had been purchased from S Limited. And S Limited has earned a profit of 25% on cost. So we have to find out how much is the unrealized profit in stock of 500. तो 500 रुपए का जो H Limited के पास स्टॉक है उसमें अनरियलाइज्ड प्रॉफिट कितना है वो मालूम करना है. S Limited has earned a profit of 25% on cost. So we'll suppose let the cost be 100, profit is 25, selling price will be 125. Already this type of problems we have done in the previous problems. So 20, 100, 25, 125. What is the actual value of stock? 500. Actual value of stock remaining is 500. So in 500 sales, how much is the profit? So 500 divided by 125 into 25, you will get 100 rupees. So 100 rupees is the unrealized profit in stock. This 100 rupees unrealized profit in stock will be deducted on the liability side as well as on the asset side. So in the liability side, share of revenue profit. How much is the share of revenue profit H Limited is getting? 900. This is the revenue profit. 900 is the share of revenue profit getting from S Limited. So from that 900, deduct 100 unrealized profit. First part over. Second part, this unrealized profit 100 rupees will be deducted from the inventory or stock in the consolidated balance sheet. तो 100 rupees का effect दोनों पे भी आएगा, assets as well as liabilities. Now, over these are the working notes completed. Now we'll come to the notes forming part of financial statements. The first one, note number 1, share capital. In this share capital, we take only the capital of holding company. Holding company capital problem में दे दिया, balance sheet it is given 10,000 rupees, same to same. 10,000 shares of rupee 1 each, 10,000, no change, nothing. So 10,000 you take it here. Second one, reserves and surplus. Now see here how reserves and surplus are calculated. We'll take the reserves of H Limited, profit and loss account of H Limited as it is. Whatever is given in the problem, same. So P&L account of H Limited 4,000. Reserves of H Limited 1,000. Now share in revenue profit from S Limited. Share in revenue profit from S Limited 900. Total revenue profit is 1200. Out of 1200, 900 goes to H Limited, 300 goes to minority interest. Already we have taken minority interest. 900 rupees will go to reserves and surplus. But from this 900 rupees, we deduct The unrealized profit in stock 100. Just now I told. So 900 minus 100 is 800 rupees. Apart from that, there is a capital reserve. How much capital reserve generated here? 600. We don't have goodwill. We got capital reserve. Take the capital reserve 600. Now totally 6,400 is the reserves and surplus. You can see here 6,400 reserves and surplus. Note number 3, minority interest. No need to calculate. Already we have calculated minority interest 1,000. Here it is. Where is that minority interest? Here. Already we have calculated 1,000 minority interest. We have taken minority interest. Now trade payable. Now trade payables we will take creditors and bills payable. First of all, creditors. In the balance sheet, creditors are given H limited 2,000, S limited 1,200, 3,200 total creditors. To this we add bills payable. Now bills payable is not there in H limited. Bills payable is there 300 rupees in S limited in the balance sheet. So total bills payable is 300. Out of 300, intercompany debt 100. It is given in the problem that bills payable in the books of S limited are all accepted on behalf of H limited. तो 300 रुपीस के बिल्स जो है वो एक्सेप्ट कौन करा सो है? H लिमिटेड. लेकिन H लिमिटेड पूरे बिल्स नहीं रोक कर रखा, वो 300 में से 200 रुपीस के बिल डिस्काउंट करवा लिया. H लिमिटेड हैज डिस्काउंटेड 200 रुपीस वर्थ ऑफ बिल. तो बचे हुए कितने बिल्स हैं? ओनली 100 रुपीस बिल्स आर अवेलेबल in the books of H limited. So only 100 rupees we have to deduct intercompany debt. So 100 rupees we have deducted. 300 minus 100, 200. Now take the total 3,200 plus 200, 3,400 is the trade payable. 3,000. Take the total of the liability side, 20,800 is the total of the liability, capital and liability. Now we'll come to the assets. Tangible, fixed to tangible assets. You can see tangible fixed assets. Sundry assets. H limited 8,000, S limited 1,200, total 9,200 is the sundry assets, fixed assets given in the problem. To this we add 200 rupees is the revaluation of assets in the books of S limited. तो S limited के assets में 200 रुपए कम लिए थे. अब we have to increase the 200 rupees. तो already 200 rupees we have taken in capital profit. See here, while calculating capital profit, we have taken revaluation of sundry assets 200. So one effect, we have added 200 rupees capital profit there. Now second effect, that 200 rupees will be added to sundry assets. Added to sundry assets. So sundry assets में यहाँ पर add कर देंगे. Where is it? Assets of S limited to be overvalued 200. तो 200 add कर दो, 9,400 is the total tangible assets. तो every adjustment will have two effects, debit effect, credit effect. तो एक effect अगर credit liability side हो गया तो दूसरा effect asset side पे होगा. तो liability side पे effect क्या होगा? Capital profit पे add कर दिया 200 rupees और वही 200 rupees asset side में sundry assets में add कर. तो 9,400 we have taken. Intangible assets goodwill, but we don't have the goodwill. We got capital reserve. No goodwill, no intangibles. Non-current investments are not there. Inventories, 6th. Now you see 6th note, inventories. Where is that inventories? Here. Actually 7th I have taken, 6th one. Inventories, stock. Stock of H limited, stock of S limited. Both the stocks we have added. From that we deduct unrealized profit in stock. Already I have calculated. Unrealized profit in stock is 100. This 100 rupees unrealized profit will affect two times. The first, it is deducted from revenue profit. Here you can see 100 rupees are deducted from revenue profit received from S limited. Again 100 rupees will be deducted from the stock. Double effect. Liability पे effect रहेगा तो asset पे भी effect होगा. In the liability we have deducted from revenue profit. In assets we will deduct from inventories. So unrealized profit in stock 100 rupees, deduct 8,400, take that 8,400 here. Next one is trade receivable, 3,000. Trade receivable. Under trade receivable we'll take the debtors. Debtors H limited, S limited. Both the debtors you add up 3,000. And bills receivable, because trade receivable consists of debtors and bills receivable. Both combined it will be trade receivable. The bills receivable. H Limited bills receivable 100 rupees is given in the balance sheet. H Limited. S Limited, no bills receivable are there in the balance sheet. We don't have any bills receivable in S Limited. So total bills receivable is 100. From this we deduct intercompany bill, intercompany debt. यहाँ पर bills payable में से minus कर लिए थे. See here, from bills payable we have deducted intercompany debt 100. Same 100 rupees we have to deduct from bills receivable. तो bills receivable में से intercompany debt 100 rupees minus कर देंगे. 100 minus 100 0. तो total will be 3000. तो total of trade receivable is 3000. Now take the total of the asset side 20,800. That's it. So we have completed the balance sheet. 18th problem. This is the last and final problem on holding companies. So next video I'm going to start on electricity companies. So I have put my maximum in explaining each and every topic. So if you have followed my instructions, watch the first video introduction part. Don't miss that. You will get the complete meaning, logic of this chapter of holding companies. Of course, this advanced corporate accounting subject, students normally feel it difficult. But if it is difficult, it does not mean that it is impossible to be done. It's very easy. Once if you full concentration, if you watch the video with an interest, definitely you can be able to get a good grasp on the subject. So follow my instructions. Watch the video first introduction part completely, and starting 2-3 videos are very, very important. If you have the patience of watching first 3-4 videos, definitely remaining videos you will find it very, very easy. Otherwise, if you join in between, all of a sudden you want to see the holding companies in the middle, that means 6th, 7th video, if you are coming and watching the video, you cannot be able to understand anything. So watch the video in continuity, in sequence. Don't skip in between, and always keep a notebook, a pen ready while I am explaining the video. Note it down. You will get a lot of knowledge from these videos, and I'm very much thankful. I'm very happy that students, that viewers are giving more premium on my videos. More views I'm getting, more subscribers I'm getting, more and more impressions I'm getting. So I'm very much thankful to the students community, and hoping that in future also you will cooperate, you will like the video. That gives me more and more enthusiasm to give much more videos. And I'm planning still to give the videos on CA and CMA too. I'm getting a lot of requests from the students. So first of all, my target is to complete the graduation level. Then already 2 videos I've uploaded on financial management, investment management. Still for MBA, I have on the cards to give the videos on international finance, to give the videos on risk management, to give the videos on operation research, strategic financial management. All these videos I'm going to plan in future. So keep watching, keep sharing, and just follow my instruction. Definitely you can be able to increase your knowledge, increase your command, confidence on your subject. All the best for your preparations, and see you again in the next video on the next topic, electricity companies. Till then, goodbye, take care.